Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint, and I'm Mathew. Now, markets globally were abuzz overnight at the advancements made in the development of a vaccine against COVID-19, and that could well be a factor at the start of trade here in India as well. But remember, our markets have already rallied quite significantly. We're going to talk about three stocks that are likely to be at the center of action today. My guest is Mayuresh Joshi of William O'Neill. Morning, Mayuresh, and thanks so much for joining me today. The first stock that I want to talk to you about is Pfizer Limited. It is a subsidiary of the company that is at the center of all the buzz about this breakthrough vaccine. Pfizer Incorporated and BioNTech announced yesterday that their vaccine prevents more than 90% of infections in a study that involved several thousand individuals. And that's more or less what the measles vaccine has also achieved. So that is a positive. How are you taking this news, though, and what does it mean for Pfizer Limited here in India?
Morning, Alex. Thanks for having me on your show. So, very good set of news that came late in the evening, at least from an Indian Standard Time, with BioNTech and the 90% efficacy that these trials are now promising. Having said that, I think the rub-off effect is going to be very, very positive on the stock itself. And the kind of expectation that one really has in terms of global distribution, in terms of how these vaccines will go across, is obviously going to be a huge, huge positive sign for Pfizer Limited itself. Now, a rub-off effect, can that be seen on the Indian subsidiary itself? Because if you're probably expected to see far more dosages coming through, you probably might need self-help coming in from your global manufacturing arms. And because Pfizer Limited Incorporation has subsidiaries in India with manufacturing plants, do they make the best use of that? So I think that is something that will have a huge positive rub-off effect on the Indian entity as well. And on the other hand, Alex, it's probably the numbers, right? So the numbers have been quite stable so far. Q2 revenues have grown 5% EBITDA margins close to 34%. Debt-free company, no two ways about it. Strong balance sheet. ROEs have been consistently maintained. Dividend payouts have remained extremely strong. And they've got a very, very solid pipeline, apart from COVID, whatever comes through in terms of the outsourced part, if that comes through. But I think the pipeline also probably remains strong, both in terms of the vitamins portfolio, in terms of the CNS, CCS side, the export opportunity that it still does from India, and what probably happens in terms of the reported ROEs, as I said. So yeah, I think positive set of news as per our methodology. I think the price strength will obviously get reflected if it moves 5-6% higher and probably comes in our pivot zone. So yeah, the momentum can probably continue. The price tag just has to get gained. I think the other factors as per the union methodology in terms of EPS rating, institutional rating, remains pretty solid.
Understood. Now, and plus, it's still early days, though it's a positive sign. We still have to wait and see whether the vaccine can effectively be transported, because it uses a messenger RNA technology, which perhaps requires significant cold storage capability to transport. Yeah. So we'll have to wait and see how that pans out here in India. The second stock I want to talk to you about is Hindustan Zinc, and the company signed an MOU with Tata Steel to cater to all of Tata Steel's domestic zinc requirements, and that seemingly is a positive for Hindustan Zinc, at least with regard to capacity utilization, right? If you're talking about 45,000 tons of zinc and other value-added metals being used to cater to Tata Steel as well as Tata Steel BSL under the MOU. So are you taking this as a positive sign?
Yes, Alex, I think that should be taken as a positive sign. I think two aspects to the whole element, right? Because Hindustan Zinc has the zinc component to it, and it also has the silver sales. So how much of the mined metal and mined production can come through is extremely critical. Now, what you've seen is one positive sign coming through the MOU with Tata Steel, and the other element probably is the volume guidance that these guys have still maintained. So the volume guidance has been maintained both for the mined and the metal production as well. At the same time, if you probably look at the reserve ratios, because for any metal company, reserve ratios become extremely, extremely critical. And the reserve ratios, both in terms of R&R, that is recoverable, and the resources that can be probably put to use, are at a very, very healthy level as well at this point of time. The second element, obviously, is the cost of production, right? It has guided that the zinc cost of production will remain below $1,000 per ton. So that's a very, very positive sign that we're probably looking at And you probably have to have that contextual requirement in terms of how much capex are they expected to put through. So somewhere around 100 to 125 million odd dollars. How the prices move on LME, extremely critical. So I think if economic activity is expected to bounce back very, very sharply, LME prices both for zinc, lead, and silver become extremely critical. And as they start moving higher because of lower inventory prices and economic activity coming back, that should also have a positive rub-off effect in terms of the overall operating leverage. So I think the balance sheet is not an issue when you probably look at this company at all. So yeah, I think positive news surrounding this stock, Alex.
But what's the rating that you have on the stock?
So at this point of time, hold. But if this positive connotations play out onto the stock in terms of, as I said, the price is moving higher over the next few months and stabilizing at this point of time. Input cost, as I said, in terms of their guidance with the cost of production expected to remain below $1,000 per ton. And free cash flows because of both these activities and the leverage created on the balance sheet, creating a further impetus in terms of dividends, which they already gave out, maintained. I think that can create a potential view. So yeah, at the point of time,
Understood.
but if these things, it's a re-rating round.
Understood. All right. So that brings us to the third stock, which is on the back of earnings, Mayuresh, EID Parry. So part of that sugar pack, interesting to talk about, right? Revenue rising just about 3%, but net profit up 75% on a year-on-year basis at 317.8 crore rupees, and margins coming in at 15% compared with just about 11.6%. What is your rating, first of all, on the earnings, and how would you, rate this in the whole context of this sugar story?
So solid set of numbers, Alex. No two ways about it. Consolidated margins came at close to 15 odd percent. You break that up into how the sugar business did, how the nutraceuticals business played out, and how the crop protection business played out. I think it has been a solid show all the way around. So revenue, I think, has grown marginally higher at 3 odd percent. But when you probably look at the operating performance, the operating margins higher than estimates on the street, and that probably laid out an effect in terms of the bottom line growth as well. It's a solid company. I think there are no two ways about it. What happens to the sugar cycle is extremely critical. And when you're probably looking at a lot of divergent happenings towards ethanol, whether you classify that between the B grade and the C grade, where realizations are far, far higher. And prices have also increased for the core sugar output as well. So that probably creates an impetus in terms of higher realization in the next year. And because of a lot of divergence that will probably happen towards ethanol, I think the kind of dynamics that you're probably looking at in the sugar cycle itself, because it's a 2-year on and off cycle, there is every hope that even if we carry an excess sugar inventory this year, with production expected to be a little bit on the lower side next year, I think the prices probably should remain in favor of these sugar players as well. So yeah, I think positive set of numbers. As per our methodology, I think EPS rating looks strong. What you're probably looking at in terms of price strength, I think it should take out that 305, 3110 levels because we are very, very sanguine in terms of price movement as well. So if it takes out that price, I think a lot of supply related issues related to the stock and what we look at in terms of OD methodology, in terms of overhead supply, should be behind it. So if it's able to take that out and sustain on that level, I think momentum might be with EID Parry. So watch out for those levels. Otherwise, I think the fundamental ratings probably on in favor of EID Parry at this point.
Thanks so much, Mayuresh, for your view on those three stocks. Of course, I'll touch base with you over the course of today because it's promising to be quite the interesting session. Thanks as always for joining me this morning, and to you,
thank you so much.
Dear viewer, thank you so much for joining me this morning and for listening into this conversation. I hope that this helped you out. Do stay tuned. Like I said, it's promising to be quite the interesting session, and you'll find all the news and updates on BloombergQuint.